Dividend investors, bonjour. This is Mike Youre, founder of Dividend Stocks and passionate investor. Today, we are talking about one of the most important struggles that we have to face as investor, and I say it, sell your losers. Today, we're going to talk about 2 reasons why you should sell them. But first, let's discuss why it is so hard to sell them. First, probably that you have been told and you learn investing, and most of the famous investors will tell you buy and hold. Therefore, make sure that you buy the right stocks and hold them almost forever. The famous investor Warren Buffett says that way often, and the power of dividend growth investing is all about holding those stocks forever to see that dividend payment increase year after year and benefiting from compounding interest. But at one point, sometimes you have to let it go. You'll make trades, you'll buy stocks that you believe in, and at one point you're going to say, well, it's been a few months, this stock is going sideways, and that's okay. But when it turns out that after a year or two you're down 30, 40%, then it hurts. It hurts your ego because you have to admit you made a mistake. And it also hurts because you're thinking, I'm not going to buy high and sell low. I want to do the opposite. And right now, it's not working in my favor. So then you can think of all the great examples of companies that actually did quite the opposite, meaning they went down and they went back up, they recovered, and they proved you right. So basically, you're thinking at this point, well, I think the market just doesn't get it. If you look at AbbVie, it's a great example. You have total return on this graph right now, right there, showing capital plus dividend over the past few years. The stock dropped by 40%. So that's a huge drop. And then at this point, you may think, oh my God, I'm tempted to sell my loser. And then it recovered fully. And actually, if you include the dividend in your calculation, your shareholders are actually making money after a huge rebound. So this tells you, yeah, well, then there you go, Mike. There's no need to sell your loser. What are you talking about? So now let me show you what you're missing. In many, many cases, what's going to happen is you are going to hold companies like Peyto Energy or Vermilion, meaning that at first you buy the stock, great dividend. There's like plenty of good reasons for growth. And something happens on the stock market. In this specific story, we're talking about the oil bust. Stock drops 40, 50%. And then you're just thinking, yeah, well, it's the oil industry. It's cyclical. It's only normal. Don't worry about anything. It's going to come back up. And then stock goes sideways. You cash your dividend. You feel good about it. And then you just say, you know what? Patience is going to pay off. And another event happened on the market, and now you're not losing 50% of your amount of your investment. You're losing 75, 85%. And then on top of showing a huge capital loss, you are also losing in terms of income. So this is one of the reasons why you should sell your loser, is to protect your portfolio. Sometimes holding on to bad stocks will just generate more losses, and you don't want that, right? The other reason why you should sell your losers is to pick the wrong stock in the right sector. Meaning, imagine that you bought shares of IBM 5 years ago. You feel good about it. I mean, you know, the big blue, huge reputation, strong brand recognition. They are even moving towards the cloud industry, strong growth vector over there. Their narrative looks great. And then you wait. And you wait, and you wait. 5 years down the road, if you don't count the dividend, your capital is losing money. You're showing a declining investment of like 3-4%. Okay, dividend yields at 4%, a lot better than all the other tech stocks, but look at what happens on the graph if you have picked companies like Apple, Microsoft, Broadcom, Intel. I could have put another dozens dividend stocks in the tech sector there, showing 100, 200, 300, even 450% return during the exact same period. Interesting enough, you could have identified IBM as a potential loser moving forwards a while ago. First, the dividend growth was not that impressive over the past few years. Second, the company has showed almost 5 years of consecutive quarter with a revenue decline. That's quite a feat. Do you really have to wait 5 years to realize that this is not going towards the right direction? After a year or two, you could have realized that, sell your shares and buy other stocks in 2018 or 2019, for example, and yet you would have made a lot more money. So the two reasons why you should sell your loser: number one, you're losing a lot of money and you could lose even more. Number two, you're missing on opportunity cost. And if you don't believe me, let's look at what I call the break-even fairy tale. The break-even fairy tale goes like this. You're losing 10% on an investment. You don't care. You're just like, hey, that's normal, market fluctuation and whatnot. I'm patient. It's all good. It's going to come back. You only need 11% to recover your money. That totally makes sense. I do that all the time. I think about it all the time, and I'm just like, you know what? That's not going to make any difference over the long run. I've made some good decision, and it's true that patience is a key component for any investor. You should hold on to your shares a little bit longer and not panic when you lose 10 or 20%. But what you see on this graph, on this table, is the more you lose, the more that stock has to soar in the future to come back. So if you're losing 35% on your investment, now you're up and you're down to $6,500 on a $10,000 investment, but that $6,500 must go back up by 54% only to reach back the initial amount invested. And if you go losing 50% of your trade, as you would have with Peyto or Vermilion Energy, now the stock has to jump back by 100%. So the more you lose, the more it goes exponential in terms of what you need to get back. Now you have to ask yourself this question: what are the odds that your stock is going to bounce back in the next 5 years by 50, 60, 100, 200% to recover from your losses? Chances are you're going to hold on to your loser forever. You're not going to make any money, and you may lose more, and you may you may miss great opportunities on the stock market at the same time. And overall, holding on to your losers will put your retirement plan at risk. I don't want you to do that, and I want to help you with selling your stocks at the right time and identify which one you should sell and which one you should keep. And this is why I've done this webinar that is right there. The live presentation is on Thursday, February 4th, but don't worry, if you watch this webinar and you're a bit late, you can register to the webinar and you will be forwarded to the replay right away. So you're not losing anything. You can watch this webinar at any time, no string attached. It's completely free. In this webinar, we're going to talk about why you should sell your loser, how you should sell them, and when you should do it. Most importantly, we're going to finish the presentation with how you can make sure it doesn't happen again, or not that often, right? Because sometimes, from time to time, you will make mistakes. It's just a matter of making sure that you identify them quickly, you sell them, and you move and invest with conviction right away. All right, so give me a thumbs up if you have enjoyed this video. If you are looking to know more about how to sell your loser, subscribe to the webinar. And until the next video, stay invested.